Folks, I kid you not. This is the stock market that will take absolutely any bit of good news and say, that's it. All that is bad is over. We are going back to the moon. Now, this is, of course, a good thing if you own stocks. It's not the greatest thing if you are wanting to buy stocks or you are wanting cheaper prices. This is why, folks, we have been saying pretty consistently, with the exception of a few times, I would say about 80% of the time, I say never squander a red opportunity. And the reason for that is since March of 2020, the general rule of thumb has been buy the dip. It seems to work. And the reason it works is because this market looks for any bit of potential news to rally. Today, we got the big Merck U-turn. So, this morning, I kind of got ambushed by that news because when I started my live stream, I didn't even know about that news yet. So, here's the thing. This COVID treatment is actually a pretty big deal so far, at least in terms of what we can see. Reducing hospitalizations by 50%, potentially completely eliminating deaths on the basis of a study of about 700 people, 14 hospitalizations, half the control group, and no deaths. It's pretty incredible. The question is how similar is this Merck treatment, a pill that you would take after you contract COVID? How similar is this to something like a remdesivir, right? A remdesivir is an antibody. Remember the monoclonal antibody cocktail that Donald Trump got, even though most people didn't have access to it. Of course, Donald Trump got injected with multiple different monoclonal antibody cocktails, which helped him go from a pretty dire state to fine. And parading around outside Walter Reed with the Secret Service, which we covered all this live, right? So the stock market is loving this pill. Like this pill, in my opinion, is more than a pill for COVID. It is it's an anxiety relief pill. It is an antidepressant. It is a please take this red pill and let stocks go to the moon for once. And that's essentially what's happening today. And again, the reason this is happening is because we are removing anxiety from the marketplace. And anytime we remove anxiety from the marketplace, first thing that happens is people take their cash and plow it into the market. Volatility index down almost 10%. Dow Jones Industrial up 1.61%. The S&P is up 1.25%. The NASDAQ is up 0.85%. And it is all because of the little red pill. And we are even seeing a part rotation in the market, which is interesting to pay attention to. A rotation, a specific rotation that we used to only see back in 2020. That rotation has heavily been broken apart in 2021, where we haven't really seen cohesiveness amongst recovery stocks versus other stocks. But today, we actually do see a cohesiveness amongst recovery stocks. Dave & Buster's up 9.12%. You've got United Airlines up 7.4%. Toast, the payment processor for restaurants, up 6.71%. Dutch Bros 6.63%. Delta up 6.55%. Southwest 5.9%. Marriott 5.75%. American Airlines, Norwegian Cruise Lines, Cheesecake. You get the idea here yet? Let's keep going just in case you don't. Uber 5%, Disney 4.27%, Carnival, American Express, Gap, MGM, Cinemark. You see where I'm going yet? All of these stocks are well over 3% today. Booking Holdings, does it ring a bell yet? Airbnb, Wynn, Simon Property Group, one of the largest mall operators in the world. Anything yet? Its recovery stocks are rallying on this news because it's not just about the COVID Delta variant and cases that we have now. It's about extinguishing fear. This pill is kind of like taking a plane, like a Boeing 737 that puts out fires, and it's loaded with foam, or that red powder or whatever they drop into fire areas, and they're putting this down as like a preventative fire retardant. That's what this red pill is. Why? Because you still have recovery stocks freaking out over the potential that Delta is going to absolutely destroy Christmas. And nobody wants Christmas to be destroyed. First of all, people don't want to die. Okay. Second of all, people who don't want the vaccine are like, wait a minute, you's telling me if I get COVID, then I can take something that's going to prevent me from dying? Hell yeah, sign me up. I don't need to get the vaccine anymore. That's, in my opinion, literally what this pill will do for the anti-vax crowd. Which good, at least they have an option, right? But it will also help the broader market go, wait a minute, this right here is going to be the solution for making sure Delta is not Santa Claus this year, or the Grinch, I should say. That's better, the Grinch, okay? We don't want a Grinch this year. This is actually very good news. Obviously, we need FDA approval for this thing. Things in phase 3 trials. I would imagine FDA approvals would be expedited, and there'll probably be many cases of compassionate use as well. Which compassionate use is essentially the opportunity to provide folks medication when they are essentially very likely to die from COVID, and they can take something that's not technically approved yet because they would probably die otherwise. So this is good. The other thing. And you can't, how do I want to say this? You can't overstate how important this is. The pill is only necessary for people who actually got sick. That's even better. You don't have to vaccinate everyone. You don't have to give the red pill to everyone. Red pill's not a vaccine. You don't have to give it to everyone. It's just, hey, whoever gets sick, we got a little red pill for you. So, in case you're wondering why the 10-year treasuries are falling, yields are falling, in case you're wondering why recovery stocks are going up, and what's crazy is you've even got some other things going up here as well, like crypto. Crypto is loving this news, absolutely loving this news. So you got the miners going up. You even got Upwork up, which is totally a stay-at-home stock. What this pill is doing is more than just pumping up recovery stocks. It is saying to the market, folks, fear not, we are going to get through this. We're in 2021, and we can defeat the challenges we face. Evergrande is not going to be a big deal. That's what the market's starting to think right now, okay? Now, I'm not making that guarantee. I think Evergrande is something we absolutely have to pay attention to. But I have said in many, many videos on this channel, I don't think that Evergrande is going to be a big deal. I think the fear of Evergrande is going to be more bad. And the fear of Evergrande has led to this crypto disaster that we've seen. And I suppose by crypto disaster, you know, when you zoom out, it's not that big of a deal, but we know that's how crypto works. But anyway, we went from, you know, this beautiful rally of like 53,000 to essentially down to almost to our support line here at just under $42,000. And broad-based sell-off in cryptocurrencies. I actually sold my crypto just to rebuy it lower because I'm like, yo, this Evergrande stuff's gonna be a disaster. Duh. It kind of was. The fear of it was. But that was the point. This is why as soon as the fear of that hit an inflection point where it's like, okay, this fear is going away, the last 3 days, not today, I've been buying the dip like crazy. And I've been buying the dip like crazy because I realized that fear is mostly overblown, that our fears might be level 100 when reality is like level 10 bad. That's usually how it is. Now, and even, folks, that was even true in the Great Recession. In the Great Recession, fear was so mega freaking high. People are like, this was one of the first places I learned what not to do. Is like at the bottom of the market, my dad's like, oh shit, my 401k's gone to hell. That's it. Sell everything. It's like, Dad, you just paper handed your retirement. Oh man. Anyway, so look, sometimes you look at what not to do, right? But anyway, this is a beautiful, beautiful thing for markets. It's a beautiful thing for people. It's a beautiful thing for humanity. It restores a lot of faith in medicine that I think all of us should have, because I think a lot of faith has been lost. What do they call it, Mr. The Fauci jab? People don't want to get the Fauci vaccine or whatever. Like there's been so much. It's so nice that now it's like, hey, okay, you guys fight about the vax. In the meantime, let's prevent people from dying over here with this pill. That's wonderful. Now, I still encourage vaccinations, but I also believe in individuals' right to choose. Hey, look, this pill is such a wonderful, as long as it ends up getting approved, wonderful backup choice. I love it. I really love it. And I believe that this moment today, over and starting, well, continuing over the next 2 weeks, let me rephrase that. Continuing over the next 2 weeks, we still have uncertainties left in the market, okay? Let's make this extremely crystal effing clear. Okay, you still have a debt ceiling crisis coming up on October 18th. Now, between you and me, it's a bunch of bull crap. Like, the U.S. government ain't going to default. Like, I think the odds of that are like 1%. Okay, I think it's not going to happen. So don't worry about it. In my opinion, okay, my opinion, it's not a big freaking deal. It's going to get handled. Okay, so then you've got the infrastructure package. We're going to get something very likely between 1.5, probably closer to like 2.5 to $3 trillion. My guess. And I expect that all to be done by October 15th. But guess what else I expect to be done by October 15th? I expect inflation numbers to come in, inflecting to the downside, finally. Now, a little bit. It's not going to be like a huge drop, but we're going to see that curve, is my expectation. That curve is going to be, in my opinion, well received by the market. I'm hopeful that the jobs data comes in moderately strong. We don't want it to be super weak, although super weak could lead to more tapering, but then you also get a sell-off because then people wonder, is the economy fundamentally weakening too much? I don't really buy the argument that the economy is fundamentally weakening. I think the economy is slapped in the face and anchored it's kind of like this anchor that you're dragging around, and it reaches around and slaps you in the face. And it's like, supply chains, freight. I just want to mess with China, like it's stupid. The fears that we have in this market right now, if you think about it, are utterly stupid. So China pulled the rug on property developers and U-turned on the amount of debt that they want companies to have, just like that, because they felt like it. Despite the fact that they were encouraging people to take on, companies to take on so much debt to build housing because they needed housing. Now they realize, wow, we have too much housing and too much debt. Well, let's make the greedy corporations pay for our stupid encouragements. Like these, in my opinion, are not like crisis mode scenarios that we face here. I'm not devastated by the outlook that we face. The stagflation arguments that I've seen are absolutely stupid. Almost all the fear mongering YouTube channels that I see end up spewing. I shouldn't say almost all, because I don't want to make that implication, because I don't watch almost all of them. I rarely watch the other channels. But for example, somebody sent me a video the other day and they're like, Kevin, this Evergrande crisis. Oh my gosh, BlackRock and Fidelity, they're going to collapse. They have a quarter of all their assets exposed to Chinese real estate. And oh my gosh, those are like $4 and $9 trillion funds. We're screwed. And I'm like, bro, dog. The person who made the video was referring to an article that referred to a specific bond within these $4 to $9 trillion funds. Those funds themselves are only like $2 to $4 billion assets, which compared to the fund is a fraction of 1/10%. And of that junk bond fund, the 25% is exposed to Chinese real estate. Why? Because interest rates are higher there, because it's a risk and it's garbage. There's a reason why junk bonds are called junk bonds. It's because when people invest in high yield stuff and they get burned, the institutional investors, or the investors who invest in like quality companies and AAA rated debt, are like, yeah, that's why I don't go there. So look, me, I'm happy. I don't love buying a run up, so I haven't bought anything on this run up. I've been buying the dip. I've been saying it day after day after day after day. I'm very, very happy about that. Now, let's go ahead and hop back on over to what the heck is going on a minute-by-minute chart. Right after I mentioned that if you like this presentation so far, make sure to hit that subscribe button. Tell me you like that. That's your best way to tell me. And get yourself up to $70 with public.com by going to metkevin.com/public. Sign up and get yourself up to $70 of free stock. It could be a partial share of Tesla, partial share of Apple. Check it out. metkevin.com/public. Okay, so rant over. Cool. Let's now get into what we actually have here. So what we have is a lot of green. There is some red in the market, but it's like, who freaking cares? Well, let's see. All right. So what we have here is, let's go look at the red. IronNet. Okay, so Lordstown gets smoked. There was something about the Lordstown Motors selling their. I can't remembering this morning. I was very, very, very tired this morning. But anyway, Lordstown Motors. I think they sold to like Foxconn or something like that. Their facility. Foxconn will build EVs for Lordstown Motors and Fisker. Oh wow, yeah. I mean, that's just a sign that they couldn't figure the manufacturing out. Elon Musk is laughing his butt off right now, going, y'all thought it was easy. That's yeah. Anyway, that's the way it works. Camber momentum going away. Moderna selling off like this is not a surprise. This is like basically the remaining crowd of people who should be getting vaccinated are gonna now go, thank you, red pill, F off. Joe Biden arrives on Capitol Hill to meet with House Democrats. Yeah, good luck. Yeah, talk to Joe Manchin too. Unless, of course, he's going to try to get the progressives to roll on that $1 trillion plan. That might be what he's doing. So anyway, we do have a little bit of red here. Look at that. Lemonade. What is interesting to me is I think that if we're right about this rotation on the market, and no guarantees, okay, no guarantees. But remember how the last few days, the SPY crashed into the close. Okay, this is important. Watch this, all right? So, look, crash into the close, right? Thanks to fund outflows. You crash past the low of the day, the previous low of the day. Crash into the close. Crash past or at the low within the day. Crash past or at the low of the day, right? Those are the last 3 days. Hold on, let me see if we also have Monday in here. This is Monday, right? I don't know, hold on. With the exception of that anomaly over there, pretty much, again, falling into the close. Literally every single day this week, folks. 4 out of 4 days this week so far, the S&P 500 has crashed in the last 10 minutes. However, folks, that is the representation of fund outflows. It's people pissing themselves because they're little babies. They're little babies who are like, oh my gosh, stocks are down. I'm losing so much money. Man, if I had to work for this, it's going to take me this many hours to make my money back. And mommy, my area hurts. And then they sell. And when people sell, the funds have no choice but to liquidate stocks. It's that simple. Institutions don't want a weenie baby. It's people. It's the clients. It's the kooky clients that are like, I want out. I can't handle it. It's like, well, that's what you hired us for. Yeah, well, I don't trust you anymore. Our portfolio's red. Okay, see ya. It's so dumb. It's so dumb. So anyway, I believe there is a potential, the S&P 500 today, because the market is green. It's very green. And people are like, oh, stocks are up. That must be a good time to invest. When keep in mind, as stocks go up, you are actually increasing your risk in the stock market. When stocks are red, you are decreasing your risk. If I love Lemonade, the insurance company, then I can decrease my risk by taking a day like today when it's down 3.86% and going, yo, this is exactly the time for me to say 1,000 stocks or shares. Thank you very much. Bye. See ya. Boom. Oh, I got to send an alert on that. In the Stocks of Psychology and Money group, link down below, which you can join for a one-time payment and get unlimited access to all of my alerts. Anyway, I'll be right there really quick. So, yeah, look, I wouldn't be surprised if the S&P 500 it actually rallies into the close. No guarantees, but if, okay, this is the if the S&P 500 rallies into the close, what is that a signal of? It is a signal of the market and people buying the not dip. They're buying the up. And that's what people do. That's why generally people underperform the market, because the emotions get so large and overwhelming for them. Say, oh my gosh, we'll see. And so far, I'm exactly right. And guess what? Secret between you and me, it ain't that freaking hard. It's intuitive. Now, it could still fall, but in my opinion, it is intuitive that we should go up into the close. If it goes down, I don't care because I'll buy, but that's my guess. We'll see. We'll see how much selling there is. So it'll be very fascinating to see. I do expect high volatility into the close, though. So we'll see some greens and reds. The big question is, the big question is, okay, are we going to go anywhere near 427 today, which would be consistent with the pattern of previous days? And so far, the answer looks like no. Even though we have volatility into the close, we're stable. We'll see, though. We got 5 minutes. A lot can happen. Let's back off that chart, jump on over to something else. We'll keep an eye on that and see what happens here. Let's see what's happening in crypto. Crypto has not been as sensitive to closing or openings as it sometimes is. It has actually, on the minute chart here, had a nice rally. I did buy a lot. It's so funny. It's crazy. Hold on a sec. Where did I say it? You got to see this. Okay, this is great. Where did I say it? I said it. Okay, let's see here. Okay, yeah, here. See, look at this. This was 929. Added 40K Bitcoin, 75K Ethereum, 35,000 ADA. Was slightly more invested in crypto than I was a week ago. Remember, I had sold with the Evergrande contagion fear, reducing my exposure. But anyway, this was 2 days ago. I'm like, I'm expecting a U-turn here, and this was at like Bitcoin like 42,000 or like 42,800 or something like that. And now we're at 48,000. This massive these sort of massive bumps here. This was around the time over here that I bought, somewhere around, I want to say the 200-day moving average here. I didn't time perfectly at the bottom, but I was watching this and I saw the catalyst. And anyway, it was over here that I last bought in. And so it just surprised me. It's consistent with our expectations for fear evaporating. Because remember, folks, fear is a short-term phenomenon. You can't be fearful forever. Humans have too much hope programmed into them to be fearful forever. The only people who are fearful forever are fear-mongering YouTube channels that have to be fearful forever because they've attracted a base of viewers who only watch their videos and share their videos when they say, the next launch crash is coming to Europe, with all the scary B-roll and stuff like that. Whatever. And that's going to spread to the nation, blah, 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 whatever. Keep doing your fear-mongering. It's nuts. So anyway, okay, so how are we doing? Upstart, down 5.7%. We do have, I'm going to take a peek here again at the S&P 500 in a moment. We've got Lemonade down 3.45%. We've got Lucid down 3%. Watching Lucid here for potential dip buy. Restoration Hardware falling into the close. Not a surprise that some of the stay-at-home stocks would fall a little bit. I'm surprised Gilead is not down more with its remdesivir drug. Which was that antibody monoclonal antibody cocktail. which obviously this red pill would have in my opinion, be competitive against. So what else do we have here? Well, that's actually interesting. Walgreens down a little bit. That makes sense because look, if everybody has to get vaccinated and they have to get boosters in Walgreens, then they go in. If you don't have to, because you could just take the pill when and if you get COVID, well, crap. Sell Walgreens. Wouldn't be surprised to see a trend on that one. DocuSign here. DocuSign. I like this. I like this right here. Yeah, there you go. Look, Charles freaking nails it. Can't be fearful forever because people get bored and life goes on. Bingo. Good job. But anyway, this is nice over here. You got yourself a you're almost at April pricing here on DocuSign, which is like, oh, ooh, April pricing. But still, like it's a nice rotation on the downside. This is a stay-at-home play though, so we'll see if it continues to rotate down. Nvidia is pretty flat, and it's certainly given up a lot of its enthusiasm here more recently. So keeping an eye on this. Okay, how did the SPY do? Let's see. Did it close high or lower? Got to go to the minute chart because we got the bell coming up. Oh, it's still doing a little bit. Now it's nowhere near the sell-off. So we broke the pattern. We did break the pattern. You still had a little bit of selling pressure going into the end, but nowhere near the sell-offs we had before. Let's listen to the bell.
Here. Just dipping into the red. Energy is still by far the outperforming sector along with communication services. The NASDAQ gained 0.75%, and small caps start the quarter in the green, up 1.7%. The biggest winner.
Here we go, folks. Look at that. The Dow Jones up 1.43, S&P 500 1.15, NASDAQ 0.82%, of the Russell at 1.69. Okay, let's take a look at how the S&P 500 closed. So remember, you watched this video. We said every day this week, the S&P 500 closed as low as the previous low of the day. Big oops here. Didn't happen today. Did not happen today. Instead, we rallied off the low. Yes, we had volatility at the end of the day, but that's a duh because funds are buying and selling right at the end of the day. Look at the volatility at the close. This makes sense. However, this fluctuation here smooths out. Go to the 30-minute chart here, folks. You had your dip. You never revisited that dip. And you can't say that staying flat at the end or a little bit of is inconsistent with the messaging here. Why? Because look at this, folks. Okay, dip, touch or break the low of the present day. Dip, touch or break the low of the day. Right, the last 2 days. Same thing here. Dip, up, dip to go to the lows earlier in the day. Same thing. I have to zoom out a little bit. With the exception of this bar. This bar on Monday was insane. But I think that was also only like a minute bar. Hold on a second. I want to see that. That bar was weird because it was true on Thursday. It was true on Wednesday. It was true on Tuesday. This right here was just like, I feel like a temporary like computer glitch or something like that. Because look, it's only a minute candlestick. So it's really screwing what the chart looks like. But if you get rid of this like almost computer glitch here or whatever the hell that is, if you get rid of that, the lows of the day are, let's see here. The lows of the day are about 142 right here. And that's almost what you touched over here. So it's consistent minus this like insane like computer glitch here. So for this entire week, we have closed at a relatively similar price to the low point of the day, removing that computer glitch. Today, the opposite was completely true. That is a strong signal, in my opinion, that over this weekend, people are going to, chillax a little bit about all this Evergrande fear and Fugazi and FUD. They're going to potentially throw their money back into cryptos, throw their money back into the stock market next week. We're going to get positive catalysts on congressional news. I'm telling you, as fear evaporates, prices go up. That is my strong expectation here. And I'm very, very happy that there was absolutely zero paper handing during this. There was good pricing during this. There was good trading during this, lowered cost basis. There was buy the dipping during this. I'm very happy about that. And so the psychology right on point during the last 2 weeks here. We'll see how it plays out over the next 2 weeks. Of course, there could always be some other crazy fear catalyst. But look at how things ended up, folks. The SunPower. Okay, I still don't understand what happened with SunPower. I think it just got upgraded. I don't remember. We covered this very briefly this morning, but I don't understand. I'm going to pull it up really quick. Okay, here, let's get it really quick. Individual company news. SunPower. Following the launch of SunPower 20 by 20 or 25 by 25. Oh, right. Join the S&P Midcap 400. That's right. Okay, yeah. Oh, well, good for SunPower. It's part of our pie at medkevin.com/solar. But anyway, okay, let's see here. Wait until the Tesla numbers come out. When do they come out? Don't they usually come out Monday? I don't think they usually come out same day. I mean, maybe that'd be cool. I'm down to watch that. All right, give me a second here. Okay. All right. That's okay. Oh, where was I? I don't remember where I was. Tesla numbers. Oh, Victor's saying Tesla numbers will come out tomorrow morning. You never wanted a Tesla bull run so much after you saw Chamath Paperhand Tila sell out of Tesla. You know, in our Discord, we have the Chamath Paperhand icon. Where is it? It's one of the emojis. There. Hold on. Let me scroll up. Okay, there. It's right above my head. Look right here. There. You see that? That is Chamath with toilet paper hands. No, I'm going to sell the stocks I pumped up. I pumped Tesla, and now I'm going to sell out on everyone. Oh, I pumped Virgin Galactic, and now I'm going to sell out. Oh, no. Sell out the vast majority of my shares, and U-turn while the market's turning red. Oh, no. Anyway, where were we? Like, at least be a little bit more upfront in like what you're doing, you know? Like, it'd be one thing. Like, look, I think it would be respectable if Chamath Paperhand Tila went and said, hey, I want to give everybody a heads up. I've got a new fund that, because he doesn't say this is just implications. Sometimes he kind of alludes to it. But look, here's the thing. Okay, I'm going to two-part this, okay? Let me start with part one because it's more interesting. Chamath told us while it was happening, one of the reasons he had to sell Virgin Galactic was because the bank told him to. In other words, the guy's leveraged up way too much. He's got too much margin, and it's no freaking surprise that when the market goes red, Mr. Chamath Paperhand Tila has to sell because he's got too much debt. He's want everybody to know, look how much money I have, and it's all just debt. Okay, it's obviously not all going to be debt. Okay, I'm not trying to take that away from him. He's got lots of money. Okay, he's done some great things. But let's be real. There's a reason why he tends to make these, oh yeah, I have to sell for a different fund decisions when the market's panicking. He did that in February with Virgin Galactic. He's doing it now with Tesla. Okay, like. It's so consistent. Oh no, the market's going down and I'm so much in debt, I must liquidate something, and then I'll just oh yeah, I'm starting a new fund. Okay, well, where is that? Where's that fund? What is the investment? Oh, you don't have it yet. Oh, right, yes. So it was margin. Okay. All right, whatever. Oh, play nice, Kevin. What's he gonna do? Block me on Twitter? Oh man. In case you don't get that reference, here, hold on. Let me go to Chamath Twitter. I gotta actually hold on a sec. Oh, yep. Okay, here we go. And so I'm logged in. Okay, I'm logged into Twitter. I just checked, and now all I'm gonna do here is type in Chamath Twitter, and when I click on this and go here, how much worse can it get? Oh gosh, who cares, baby? I have many times tried to apologize for asking him why he paper-handed Virgin Galactic, but I didn't know a billionaire had such thin skin that he couldn't stand up to somebody asking him why he paper-handed Virgin Galactic. That's sad. I'm just gonna block everybody who's mean to me in the comments. That's it. Block everyone. Oh my gosh. Okay. And to be fair, okay, full disclaimer, we do not know all of the details around what Chamath Paperhand Tila is up to. Obviously, I respect some things that he's done. I just think he's got some thin skin, and I think it'd be big of him to actually stand in front of his audience because he's had a lot of loyal fans. I think he's losing a lot of loyal fans. I think it would be big of him, like big boy, like wake up and do something to just make a video, do an interview with somebody. It doesn't have to be me. I don't care. Stand in front of your audience and go, hey folks, I just want to be transparent. Yes, I use margin, but I do that to create great funds. Here's what I'm working on right now. I can't give you all the details, but here's what I'm working on. Like, at least tell us something. This is why we have the emoji for paper hands. Ay, ay, ay. All right. What's another one? Let's say, give me another topic. What else should I rip on today? This has been a great day so far. I mean, this live stream so far has been like 3 videos in one. Chamath sells after pumping. Yeah. StreamYard, yo. Michael Burry. Michael Burry should interview Chamath. No. You need to have opposites. Not two babies. I can't, folks. I can't make this stuff up, okay? Somebody else mentions Michael Burry, okay? Wait for it. Go to Google, Twitter, Cassandra, because for some reason Cassandra is Michael Burry. Whatever. I click on this Twitter account. Oh, God damn it. I sent him an eggplant. That's it. Where was it? Eggplant emoji. Let me see if I can find the tweet. Because if I do this and then go Twitter at Cassandra at Real Meat Kevin eggplant. Twitter. No. Google used to have it indexed. I sent him an eggplant. I sent him an eggplant emoji, and I think Google removed it from the index. But after it was still it was still there. Cassandra is a Greek goddess of prophecy. Oh, that's cute. At least well, let's put it this way. Where's Cassandra today? Anyway, sorry. That's mean. Sorry, Greeks. Okay. So, yeah. Okay. What else we got? But I'm worried about going into margin on these plays. How concerned should I be about margin? This is not the market to go into margin on, in my opinion. This is a little misleading, by the way. You can't say that I'm blocked by a lot of billionaires when I'm blocked by 2. And I also speak my mind, and I'm not a simp for these people because they're just humans as well who happen to be in the right place at the right time. Yes, had experiences in a certain skill set and the balls to do something. I give them credit for that. A lot of credit for that. But I don't give them credit for being weenie babies who get all nervous when somebody asks a question or sends an eggplant emoji. Trying to buy the dips. Yeah, I would not go into margin in this market. I have 0 margin. I don't want any margin. This is just not the market for margin, in my opinion. I think that if you want exposure to leverage, you could consider certain option contracts. I wouldn't necessarily encourage something too crazy, like maybe go in the money calls if you really wanted to, but I generally don't support calls unless we expect volatility to go up again. All right, well, let's see. Oh no, I've been blocked by Newsom, not on Twitter, but in person. I got worse from him. Newsom's a politician, so at least Chamath and Michael Burry will block you to your face. Gavin Newsom will have Facebook try to delete your posts from Instagram. Gavin Newsom will get his cops to ban you from his events. That is behind the scenes shade. Mm-hmm. That's even more scummy. Exactly, Chris. Okay, so anyway, people just hate the truth. It's hard. It's so hard. Okay, so Hut 8 Mining's doing great. What's going on in after hours? Let's look. Let's look at the after hours, shall we? All right, so we've got Hippo Holdings up, yay, 2.17%. Matterport went down about 1.43%. I'd like to see a little bit more pain here at Matterport. Really down to that 15 again would be great. I don't know if we'll get there, especially now that we're starting to get a little bit of a U-turn in that euphoric element. See, look at this. The reason Peloton is actually up on a red pill day like today with the Merck pill news, when you consider the after hours, because it's down 0.4, but it's up 0.52 here, is really because it might be a sign of the bleeding stopping and a rotation coming in just broader markets. Arcimoto, Dutch Pro, ZXPI, blah blah blah. Okay, what's news? Diz rebet. I know. I bought some Diz yesterday. And I like it. No, I don't think Apple is a must buy right now. Yeah, I mean, I like Apple. Don't get me wrong about that. I like Apple a lot, but I've got exposure to it. I'm not like jumping up and down about like plowing more in, but I'm not offended by that. I would do it if somebody's like, Kevin, you have to pick a stock right now. That's a FANG stock. Well, it'd probably be Google, and then it'd probably be Apple. Yeah. How will higher interest rates impact CapEx spending in tech? Oh, dude, they're literally blowing all the freaking money they can right now because they expect rates to go up. They expect the cheap, funny money to go away. So I'm not so worried about it because I think they're going to have already blown their money. As a Greek person, I'm incredibly not offended. Thank you. Let's see. Oh, thanks, Blue. Is that blue or blau? I think that's blau because U with the dot is AU. So I'm pretty sure that's blau. Yeah, I think I'm right about that. Anyway. The truth is never welcomed around the dishonest. That's a great line. No, my opposition to margin is what it does to your psyche when the market falls. When the market falls and you're in margin, you do what Chamath does and you paper hand. When the market falls and you're not in margin, you buy the dip because you're not worried about that increasing exposure to risk. I'm telling you, Chris, Barron's is freaking amazing. Buy the paper. You will love it. Get the actual hard paper on Saturdays. It's so good. Sup, Doug? All right. What else am I supposed to do now? All right. I guess we could go look at Barron's. That's right. Can't touch this when you're at 0% margin. That's right. All right. So what else do we have today? I don't know. All right. Let's see here. Oh, yeah. Okay. All right. So let's look at Barron's a little bit. Economist. Very, very good, too. Yeah. Do I get that on my fax machine? No, they throw it in front of your door. See, have y'all ever seen something like this? These are papers with words written on them and charts and things you can feel. And look what you could do on this. It's so cool. You could take one of these things and you could like circle things. It's great. Love it. Okay, anyway. And then make sure to recycle it. Okay, so where were we here? Let's see here. Okay, game changer. Agreed. Stocks are higher after strong economic data. What data? I don't know. I couldn't get into Smile Direct. I don't know. Maybe that'll change. But anyway. How do you control F? Well, see, the beautiful thing is you don't have to control find because it doesn't change. Like, that's one of the reasons I still get the paper, is because when you go to like the front page of the Wall Street Journal, this stupid thing changes all the time throughout the day. And so it's like you're constantly getting fed only the most clickbaity stuff at the front. And then you never get the stuff that's like, deep in the the columns, Zoom enters an awkward pause. Like, when is that going to be on the front page of the Wall Street Journal? It's not. Anyway. So, come on. It always signs me out. That's my one gripe with Barron's and Bloomberg. Bloomberg, Financial Times, Wall Street Bets, or Barron's. Pick 3. Bloomberg, Financial Times, and Barron's. Look, I support the whole Wall Street Bet movement. I think the forum is great. I think there are a lot of cases where there's some cool DD that comes out on there. I just, if you want to filter to only DD, you could go to like Seeking Alpha. And it basically is just DD without the YOLOs and the anxiety and the drama. Although that is entertaining, don't get me wrong. Okay, that's fine. It's fine. That was up here. Merck rises on COVID pill. And what else is happening in the stock market today? Yeah, right. Well, are they just giving us a summary here? Oh, here. Manufacturing data is starting to turn around. Whoa, wait a second here. I thought the economy was slowing. That's at least what consumer confidence tells us. In fact, let me tell you this, folks. I am sick and freaking tired of hearing reports about what consumers think. Okay, if you watch this channel, the point of this channel is to basically tell you how not to act like a consumer. And so this is why I get kind of pissed when people are like, oh my goodness, consumer confidence is down. Well, yeah, it's down because you're fearful little babies. And then as soon as the stock market goes green again, oh, consumer confidence is up again. It is a lagging, stupid, dumb indicator. It's the same thing with consumer expectations for inflation. When inflation is high, consumers are like, oh man, we're going to have bad inflation for the next 3 years. We're all screwed, man. Oh, what am I going to do? It's all lagging. It's so bad because then as soon as inflation starts going down, it's like, oh yeah, inflation will be bad. We got to do that. Consumer numbers. Screw that. What I want is stuff like this. Manufacturing data. See, look at this. She cited that economic data has been surprisingly strong recently after a period during the summer when data was surprisingly poor. Personal income in August rose 0.2% in August. We started having the child tax credit. Yeah, we started having the child tax credit there. Good. In line with expectations. Personal spending increased 0.8% better than expected. Investors want to see that spending remain healthy. Well, yeah. More economically sensitive or cyclical stocks were performing better on U.S. economic data. The Institute for Supply Managers Index rose 61.1, higher than the expected reading of 59.5. Remember, a reading above 50 is a reading of growth. Then we've got over-inflationary pressure will be more persistent in 2022, wrote this Citigroup economist. Higher inflation is eating into income. Whatever. We already know that food prices went up a third thanks to the United Nations index on inflation. Investors will be closely watching the September jobs report. Got it. Inflation could weigh, of course. This was actually not a good article. There was very little information in this. I thought we were going to get some more data. We got one line on really data, and it was that manufacturing supply data piece. That's boring. House expected to vote on infrastructure Friday after delays. Well, that'll be interesting. Well, Biden's meeting with them right now. He's probably going to do some kind of like, get this done for me. No, that sounds too Bill Clinton-ish. Well, I'm not going to do an accent then. get this done basically, and then we'll make sure to get the $3.5 trillion thing done after that, because he just needs progressives to be on board, get this done, and then once he gets progressives on board to roll and go for this bill, then he can actually negotiate with Kirsten Sinema and Joe Manchin, which he's having trouble doing right now. Holiday supply. Ooh, I like how. Look at this is funny. I like how when it's a short read, they put how many minutes it's going to take you to read it, like 3 minutes to read this. Or 1 minute to read it, or 2 minutes to read it, or 1 minute to read it. But if it's a long read, they don't tell you how long. They just say it's long. Yeah. All right. Somebody goes, the ads imply you're ready to retire. Well, that's because they're investing in Barron's. I bet you the average age of a Barron's reader is like 50 to 60. Average age Barron's readership. Let's see. Oh, nailed it. 50 freaking 4. 90.8% male. Woo! But look at that average personal. See, folks, you want to roll with the money boys. There you go. Average personal income, $282,000. Average household net worth, $2.9 million. Let's go. I told you, it ain't, I'm not going to diss other platforms. This is a very good platform, and I'm not paid by them either. But yeah, nailed it. Holiday supply chain fears are overblown. What investors and shoppers need to know. Cathie Wood reads this as well. She's one of that like 9.2% of women who actually reads Barron's. How do I know that? Because I read Barron's on Saturday, and then Cathie Wood goes into interviews on Mondays, and sometimes I'm like, gosh, that sounds awfully familiar to something I just read in Barron's. Sorry, that's mean. I'm not trying to discredit Cathie. I love Cathie. I've just had that feeling a couple times. I could be wrong. Anyway, all right, so some person recently discovered a hot seller for Christmas. I posted these cute little scooters on Instagram, seller of whatever stuff. The likes were piling up and people were headed to the site. What is this about? Supply chain fears are overblown. Okay, got it. The metal push scooters. Oh, by the way, I will say before I read this article that I do think it is very possible, okay? And this is important as well for companies like Enphase, for retailers, for Amazon, for consumerism, for cars, whatever, okay? I believe that the supply chain shortages are actually going to be at peak insanity now. Okay, why would I say that? Why wouldn't supply chain shortages be at peak insanity in November, right before the Christmas holiday season? Because, folks, let me ask you this. If you are a business owner, are you going to sit around in August going, oh man, the supply chain issues are a big issue and freight's taking a lot longer. You know, I should procrastinate my Christmas ordering to November. No, that kind of thinking is going to lead you to go bankrupt. Instead, you're going to order all your crap well in advance and you're going to store it. You're better off buying more warehousing space and making sure you never run out of product again. And you get rid of just-in-time inventory because of the fragility of our supply chain system. Just-in-time inventory is the easiest picture I think of is with just-in-time inventory is, let's say you're assembling a car and the car's done, the axles are in, you just need to throw the wheels on. The best case scenario for the most efficient corporation ever is the dude who's like, okay, the car's here, I'm ready for the wheels now. Turns around and here's FedEx going, here are your wheels, sir. That's just-in-time inventory because now you didn't have to store it long, you didn't have to inventory, you didn't have to deal with theft and decay, and the depreciation of the product, right? That's just-in-time inventory. But and that's kind of what we had always been heading to with capitalism because it's very efficient, lowers costs. But the problem with that is as soon as you have supply chain issues, now you go, I am ready for my wheel. Oh no, I have to wait 8 weeks for it, right? That's worse than just storing it. So I believe that the supply chain issues could actually be at a precipice right now. that supply chain issues, while I expect them to persist throughout 2022, will also start inflecting down, along with inflation starting to inflect down, because suppliers and merchants are trying to stock up before the holidays. Duh. That's common sense. All right. So, where were we? All right. Metal scooters, whatever. I don't care. I just want to hear the financial stuff here. Factory. Okay, here's some factory founded by some brother-in-laws. Oh my gosh, this is why this article is long, because they're going to tell me a whole story. Okay. I had to make a decision last week, he said, of supplying U.S. sellers with more scooters for Christmas. It's too late. See, it's already too late. I expected that. December outages of hit toys are nothing new. This year could see more shortfalls than most, judging by 88 vessels backed up near an important California port complex. But predictions of holiday sales strangled by supply chain havoc. Think Charlie Brown Christmas trees surrounded by few boxes and bows look decidedly overblown. This is interesting. I haven't read this yet. This is fascinating so far. In late spring, Barron's reported on a seemingly everything shortage, set off by abrupt pandemic shifts in consumer spending, combined with company miscalculations and freak events. The everything shortage is here. I remember reading that one. Now, our conversations with retailers, manufacturers, shippers, and Wall Street forecasters indicate that businesses are learning to cope with the bottlenecks, which will largely ease next year, albeit slowly. Virus trends have taken a promising turn in recent weeks. Critical manufacturing centers are reopening. Consumers are only slowly returning to spending on experiences after a huge shift in preference towards household goods. But that reversal will continue to pick up as new COVID cases fall and vaccines become available for children. That is actually interesting. So in addition to my argument, which they have not mentioned my argument yet, which my argument I think is very, very powerful, that you're going to load up on inventory prior to the holiday season. But in addition to that, they're saying, hey, look, people, and this is a Kathy Woodian argument as well, people already bought the crap that they wanted. People already bought their level 99 coffee mug. People already bought, is it this one? Yeah. People already bought, wait for it. People already bought their Spy is Falling shirt right below where the little video plays on your YouTube channel. You can click buy on it. People already got their stuff. Now it's time to spend on experiences. So, okay, let's see here. Many of our savvy retailers and importers advance. Let's go. See? What are we talking about here, folks? Come on. It's common sense. Many of our savvy retailers and importers advanced their orders. We started seeing Christmas goods arrive on our shores back in June. Ho, that's even earlier than I expected. My goodness. Woo-hoo-hoo-hoo. Nailed it. Normally, that arrival would take place at the end of August, beginning of September. Nice. Large retailers with sophisticated supply chains like Walmart, Target, Costco will continue to thrive as transportation brokers like XPO Logistics, which can help level the field for smaller companies. As will brokers like XPO. Got it. Toy giants Mattel and Hasbro will have a holiday edge over smaller rivals. For shoppers, Xbox One gaming consoles will be easier to come by than PlayStation 5s. Video game publishers, okay, whatever. Inflation, which has lately spiked in a rise in bond yields from barely perceptible levels to almost mentionable ones, could remain elevated. Okay, so basically, hey, look, the 10-year treasury was super low, spiked up, but it only spiked up a little bit, to that 1.48 level right now, and maybe will remain flat here, but we don't actually expect it to continue skyrocketing. Okay, let's see here. Labor markets remain tight. Higher pay and prices for manufactured goods will stick, but overall inflation is likely to slow to unalarming levels next year. All told, fourth quarter mirth estimates appear to be beatable. The heck is that? Mirth. Whatever. Amusement. What? I have no idea. Okay, whatever. The cause for shortage since the start of the pandemic have been many and varied, but they fall into few groups. A handful were true one-offs, like the March grounding of a ship that blocked the Suez Canal, which carries 12% of the worldwide trade, the canal does, or a Louisiana factory fire that knocked out production of swimming pool chlorine. Got it. Okay. Oh my gosh. Number of container ships anchored outside the port of Los Angeles. Normal day 1. September 19th, 73. Oh my gosh. See, that's what I'm saying. Like peak supply chain fears now. Some were actions with unforeseen consequences. Okay, whatever. But most causes have been direct results of the virus. That missed trip to Disney with the funds redeployed to a new patio set and big screen TV was part of a vast spending shift from services to goods, bolstered by stimulus checks. Exports from Asia, where many consumer goods are made, jumped 20% relative to those from Europe and the United States. That compares with just a one. Okay, cool. So basically, yeah, it makes sense. You still want to spend your money because God forbid people actually invest in stocks. But anyway, people still want to spend their money. And yeah, so like they're saying here, instead of buying a trip to Disney, you're spending it on fixing up your home or some. Ooh, I could finally afford that Restoration Hardware expensive piece of wood or metal junk. I'm sorry, like if I ever buy a piece of furniture from Restoration Hardware, please unsubscribe. I do not have any Restoration Hardware pieces right now, and I will not. I don't care how freaking fancy it looks. In fact, the more fancy it looks, the less I want it. How's that? I want people to see my basic stuff because that's what I care about. I don't really care about the fancy stuff. It was kind of funny. Like somebody came over our house the other day and they're like, "Oh, did you guys redo your entire kitchen? Look, those must be brand new cabinets." And we're like, "We painted them. We don't spend on stuff we don't need to spend money on." It's the same thing we do with our rental properties. It's like, what? Those are the original cabinets? They're wood and they hold your dishes. They're fine. Why do you need new ones? IKEA is king. Okay. Do you know that when I became a real estate agent, when we remodeled our first house, Lauren and I, we IKEA'd it out and we basically turned our house into an IKEA showroom. Let us show you how you could buy a fixer-upper, IKEA it up, and do it on a dime. Because we only had a dime. No, Michael, there's a difference. Okay, hold on a second. Because that is ignorant. That is not cool. You can't say, look, a slumlord is somebody who buys a broken property, or an unhealthy property, and doesn't do work to it. They don't do health and safety repairs. They don't care about the outlets or the plumbing or the mold or the mildew or the roof or the water intrusion or the garbage plumbing that backs up. And they go, you deal with it. It's your home. That is a slumlord, okay? That is a slumlord. And so clearly, somebody who would say something like that is not a property owner. Michael here is a tenant. Now, a frugal landlord is somebody who does things that are smart. Like, hey, let's have an electrician in a high quality fashion install a very safe ceiling fan box with new electrical wiring. But instead of spending $1,000 or $2,000 on some fancy dumb fan that does the same thing as a cheap fan, we're going to put in a $200 fan. Now, you tell me, is that being a slumlord? No. You can have your own opinion, which obviously, Michael, you are a tenant. And if you knew the difference, you'd be an owner of real estate because you'd realize you could make a lot of money in real estate. Except I know a lot of you watch this and you're stockies and you don't get into real estate when you should be getting into real estate. Now, we're going to go back to the supply chain issues. So that has led to runs on key components like computer chips for appliances and vehicles, spending on plants and equipment to make those items is expected to surge, whatever. Yeah. Okay, so remember somebody, I don't know, maybe you don't remember. Somebody asked me earlier in my live stream, what about CapEx spending? Is CapEx going to go down? Like when interest rates go up, right? So interest rates go up, and is that going to lead capital spending or investments into companies to go down? My argument was no, because companies are spending like crazy right now, milking the low interest rates because they know it's like temporary cheap money, right? This is interesting here. Spending on plants and equipment to make those items is expected to surge more than 50% this year from pre-pandemic levels. So another thing that our markets are or like I think investors are missing is the fact that every single corporation that exists is literally, in my opinion, 5 times more efficient than it was pre-pandemic. Now, I know that sounds crazy, but let me ask you this, okay? Because people are like, oh my gosh, the valuations of the stock market is so much higher than it used to be or whatever. Look, when you can go to a company like Apple or Tesla or Google or whatever, and or any corporation, and the pandemic hits, and you can lay off thousands of people, tens of thousands of people can get laid off, and then you can just happen to hire back the good ones, the really good workers. No offense to the people who weren't hired back, okay? That's not the case for everyone. No triggering the viewers. But let's be real here. There's going to be an element of filtering going on at the corporations. You are making these businesses more human efficient. Now you are investing in better machinery to prevent or warehouses or plants, whatever, PPE, is it property, plant, and equipment? You're investing in these things. That's an accounting term. But anyway, I don't know why I just said that. Squirrel. But anyway, then you actually, in the 10 years thereafter, are a way more efficient company. The pandemic ended up being a gift to company efficiency. That is really, really important as an investor in the stock market because it helps push margins up. Very, very important. Okay, but shortages there are likely to stretch well into next year. Of course. I mean, you can't build PPE that quickly, not to be confused with personnel protective equipment, plant, property, and equipment. Passenger planes carry about half of air freight, so a sluggish recovery for air travel has added to shipping burdens. Fine. Under normal circumstances, the ideal number of ships to drop anchor outside of California's San Pedro complex consists is 0. In June there were 6, whatever. Now they're like 70 to 80. Okay, got it. Lots of ships docked outside. That's crazy. I should go over there and fly my drone over there, but that would require me to drive to LA, which I'm probably not going to do. I love how they put the evergreen here. That's a cool picture. Anyway, the ship jam will not be cleared by Christmas. Sure, of course not. But he predicts a holiday of plenty, says someone. Who knows? They were interviewed by Barron's, so we'll just leave it at that. There will be goods on the store shelves. Not saying that everybody who's interviewed by Barron's knows what they're talking about. There will be goods on store shelves in fulfillment centers for us to order. My only advice is maybe for the American consumer, like I'm doing, shop a little early. That's prudent. Trucking companies and use a firm. Trucking companies have struggled to find new drivers. This is also true, by the way, in the United Kingdom, which is one of the reasons we're seeing those gasoline issues. The piece of it certainly for us is beginning, the piece of it certainly for us is beginning to abate. Retailers have had time to prepare, and shoppers can expect full shelves. There will, in fact, be gifts under the trees. Signs of supply chain stress remain unnerving to investors. In a recent earnings report, Nike lowered its revenue forecast to account in part for factory closures in Nam. Shares lost 6% that day, but there are also signs that relief is coming. New Balance recently told analysts that Vietnam factories could return to 60 to 70% of capacity by mid-October versus 30 to 40% today. If there's one promising indicator on that front, it's that COVID cases worldwide have been falling. Yes. Toy makers sound confident, mostly. Barbie maker Mattel confirmed that it has already factored in shipping challenges. Good. Heck yeah. Also, Nerf said sales might slip from the third to fourth quarter, but won't hurt overall holiday business. Cool. That's great. I expect this season to be insane. It kind of makes you wonder if you can really I wonder if you could start investing in some of the retail consumer companies. It'd be very interesting. That would be very interesting. Yeah, actually, Jolly, we've covered this story here. This is actually a good one. This is the Federal Reserve has actually talked about this as well in some papers, which I've done a video on about. But basically comparing post-wars to post-pandemics. It's true. In wars, contributors to society die. In pandemics, people who don't contribute to society tend to be more of the ones who die. This is also a very good point. Not saying you want to filter your society out to more efficient people, but and that sounds very harsh. I'm just talking about that from an investor point of view. Yeah. Anyway, Okay. Jeffries, I'm going to just walk away from that one. Jeffries analyst who covers mass merchants and toy companies says holiday goods availability could go either way depending on whether congestion eases over the next 30 days. Most years, retailers could replenish inventories 2 or 3 times between mid-October and mid-December. This year, shoppers should see healthy stock levels to start, then draw down in a small surge as popular items run out. Got it. PlayStation 5, good luck. Okay, Xbox One become available. Great. As for GameStop, will thrive and receive plenty of holiday consoles, and that the Reddit traders are directionally right, but also the stock is overvalued by $150. Oh my gosh. He didn't say at $150. He said by $150. Ooh. Ooh. Burn. Ay, ay, ay. Ay, 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 ay. Okay. Okay. So he is bullish on video game publishers, Activision and EA, Take-Two Interactive, but says Take-Two is less well positioned for holiday because it recently delayed the release of GTA 5. Oh, that's a bummer. Among toy makers, prefers Hasbro to Mattel. I mean, this whole article here gives you a whole lot of ideas in terms of things that you can invest in. This is one of the reasons I love Barron's. But yeah, I mean, think about it. Hasbro, with Nerf and Activision Blizzard, which has recently sold off. There could be an argument to make like a basket of like supply chain stocks. That would be interesting. Supply shortage stocks. Yeah. Well, I'll try something like that. Maybe I'll put something together called like metkevin.com/supply. Well, I might do that. That'd be cool. All right. Anyway, she adds, however, that online shoppers in particular should start shopping early. Okay, we know about this. Soaring prices. Inflation measures that trim items with outlying price gains imply that the headline measure will come down, but slowly as bottlenecks ease. Okay. Chicago, please, business is growing, whatever. Okay, this was a very good piece. I like this. This was a very fascinating piece about maybe you buy the dip on companies that have just been abused by the supply chain crises, and you YOLO the dip on those. That's an interesting idea. I'm gonna play with that. So maybe by the time you're watching this, there'll be something at metkevin.com/supply. If not, set a reminder to check it tomorrow. So cool. Well, thank you so much for watching this. Make sure to get yourself a free stock with Public, worth all the way up to $70 by going to metkevin.com/public. Check out the courses on learning the psychology of money, the psychology of real estate, how not to be a weenie baby, make YouTube videos, sales, whatever. Check those out. Link down below. Coupon code called Diamond Hands down there. And we'll see you in the next one. Thanks so much for being here, and goodbye.